A very good morning, folks, and welcome to a brand new episode of Finmet Mondays. Sunil, thank you so much for tuning in once again. Anything interesting that you observed in the sudden downfall of gold last week?
That I looked at the investor interest in terms of GLD, which is the largest ETF in New York. And what I found is that for the last 3 weeks, there's been really no increase in holdings in the gold ETF. That's normally the route in which sophisticated investors in New York would get long of gold. At the same time, what we have seen is both JP Morgan and UBS have been advising their wealth management customers that this is a time, these levels are levels at which they should enter gold and maybe accumulate some
Yes.
positions. So I think short term, we will see a little bit of support for gold.
Even the economic data that came in, I think it was the jobless claims for one, and the services PMI. I think both again gave a very strong picture of the economy really doing really well, and that kind of just reinforces the Fed's point of view that maybe if we want a little bit of leeway to keep rates elevated, we can do that, and that's just keeping all gold bulls slightly on edge. We pause right here around the 1915 to 1920 region. This is where gold is now hugging the 200-day moving average, which is this blue line. We've seen historically that prices have always moved above the 200-day moving average, and that's sort of like a bullish signal for the long-term trends. But the moment you kind of again hit and kind of test this level, there is a little bit of confusion in the markets. And I think what's going to happen next week is we're going to see a slight pullback in the metal as a result of testing this. This is probably something that will only be broken if we see a convincing commentary from the Fed that we're going to keep increasing interest rates one last time, or we're going to not do something significant with interest rates, which is going to keep it that way. So I do think that in the absence of any such data, we are going to see a bump up again to this red line, which is the descending trend line, and we're going to hit this red belt over here, which is somewhere around the 1931 to 1940 region. If you look at the dollar index, this has been the daily trend of dollar index. You see here that there was a massive pullback and you've been descending continuously up there, lower highs and lower lows as you are progressing downwards. And suddenly, over the last couple of weeks, you've seen a major resistance broken, and this downward trend kind of reversed in a way, because you see that you have candlesticks here that are beyond the previous resistance level, right? This also kind of signals to you how the markets are really feeling about the entire economy in general. So I do think gold is going to be under pressure for some more time before we see it really lift off, as we've been discussing, in quite a few weeks right now. Let's see how the markets play out this week. But yeah, till then, thank you so much and goodbye.